Hey there, Paul Hickman here. Have you ever wondered what would happen to the US economy if the dollar loses its global dominance? Let's dive in. You've heard about countries moving away from the US dollar, right? Today, we'll not only explore how de-dollarization could impact America's economic landscape, but I'm also going to reveal some strategies for safeguarding your personal investments. So stick around to the end and you'll understand why this shift could be both a crisis and an opportunity. So what exactly is de-dollarization? Simply put, it's the shift away from using the US dollar in global trade, investment, and reserves. The US has enjoyed the dollar's status as the world's reserve currency for decades, granting us privileges like lower interest rates and making it cheaper for our government to borrow money. Think of the dollar as a VIP ticket that has let America sit in the best seats of the global economy. We've enjoyed trade benefits, and global demand for U.S. debt has kept our interest rates relatively low. So if de-dollarization gains steam, it could cost the U.S. these VIP privileges, leading to higher borrowing costs and potential inflation. And that would affect everyone, from the government to individual households. Countries are not standing still. Many are actively moving away from the dollar. Take the BRICS nations, Brazil, Russia, India, China, and South Africa. They're not just stockpiling gold, they're engaging in bilateral trade agreements that completely bypass the US dollar. And let's not forget about cryptocurrencies and special drawing rights, or SDRs, from the International Monetary Fund. These alternatives are gaining traction as well. Now here's the kicker. The more countries pull away from the dollar, the weaker America's geopolitical power becomes. We're talking about potentially less influence in international organizations and even weakened national security. But how does this affect you? Well, imagine a world where the dollar is not as dominant. Gas prices could rise as oil trade shifts away from the dollar. Your mortgage rate? That could spike too. Your retirement savings are also on the line. With a less dominant dollar, your 401k might not go as far as you had hoped. The bottom line? De-dollarization could make everyday living more expensive and make your retirement savings less effective. You might have to make adjustments sooner than you think. All right, as promised, let's talk about how to safeguard your investments. Commodities like gold and silver have historically been safe havens during currency devaluations. Then there's the digital frontier. Cryptocurrencies like Bitcoin and Ethereum offer diversification options that are decoupled from traditional fiat currencies. Also, don't forget about international stocks. By investing in markets that might gain from a weaker dollar, you can hedge your bets. By diversifying your assets, you can not only protect your investments, but also potentially profit from the very shifts that are causing concern. Remember, in every crisis lies the seed of opportunity. And that wraps it up. We've looked at how the waning dominance of the US dollar could both be a crisis and an opportunity. If you found this deeper dive valuable, do me a favor. Hit that like button, share the video, and don't forget to subscribe for more insights into money, finance, and the economy. This is Paul Hickman, signing off.